Right? What is Bitcoin? Well, Bitcoin is digital transformation of gold, maybe. Maybe Bitcoin is digital transformation of property. More interesting. Bitcoin is digital transformation of money, very politically charged, ideologically charged term. People fight over what money is. And Bitcoin is digital transformation of energy. No one's got their head around that yet. But all these things are things that Google, Apple, Amazon, and Facebook did not figure out how to digitally transform. And they're so profound that people staring at them, right? The traditional Wall Streeters are like the Kodaks staring at digital photos, and they still haven't quite got their head around the implications, right? And ultimately, you want to make a lot of money on digital photos, you'll probably do it via Facebook or Instagram, more likely even than you'll do it by creating a digital camera. So I just think we're the next decade, it's just the continuation of the digital transformation of everything in the 20th century. Mark Andreessen had this phrase, software is eating the world, right? Smart people have said Bitcoin is just software eating money. What I see here is with digital energy, it's like the same exact thing. I have a megawatt of power. If I sell the megawatt of power at 12 cents a kilowatt hour, it's about $1 million. If I hold the energy as a megawatt of electricity, I put it in a battery, I lose 2% of the power every month. I lose 24% of the power a year, a 24% inflation rate on a battery. If I send it down an electricity line, 6% transaction cost. Move the electricity 10 times, lose 60% of the money. Hold it for, hold it for 3 years, cut the amount in half. Half-life of electricity in a battery is 3 years if you had the perfect battery. It's pretty obvious that's analog energy. That's electromagnetic energy. That's a way to store it. Or I could store it in digital form, convert it to Bitcoin. You run a megawatt of power through a SHA-256 S19 miner, you end up with about $5 or $6 million, $5.5 million worth of Bitcoin right now. Once you've generated the Bitcoin, and your cost is the capital cost of the SHA-256 miner and the engineering to run the center and the like. So you got a cost there, but now you've got digital energy. Now your inflation rate 0. Now you can hold it for 1,000 years. You can move it. You can send it 1,000 times. Transaction fee is next to nothing. It's effectively nothing on the Lightning Network, and you know what it is on the Bitcoin network. And you're like, well, but how's it digital energy? How do you get it back to be energy? And the answer is, okay, I send $1 billion block of it to Tokyo. I run it through an exchange. Heat exchanger? Decoder? No, I run it through a Bitcoin exchange. And I convert it back into yen, and I take the yen and I buy electricity from the Tokyo Power Company. And when do I do that? Whenever I want to do that. But what's more valuable than property, right? Digital property. What's more valuable than digital property? Digital energy. In theory, what is the most valuable thing in the universe? The answer is digital energy. Digital energy is the theoretical most valuable, most highly appreciating asset in the universe. And what's the likely yield? Heck, we've talked about that before. I mean, I think the price appreciates with the inflation rate and the fiat frame of reference you're in. If you're in Turkey or Argentina, it's going up very fast. If you're in the US, it's just going up. It appreciates with the technical utility. When I build it into Coinbase and Binance and Square and PayPal and Apple and whatever, it goes up. It appreciates with the adoption as people adopt it as a useful asset. MicroStrategy adopted it, right? Bitcoin didn't go up because of the inflation, and it didn't go up because of the technical utility. When the MicroStrategy effect is MicroStrategy adopted it as a treasury asset, then a primary treasury asset, then a financial strategy, and that created $3.5 billion of demand for Bitcoin, one company. And then the last reason it goes up is it goes up because of productivity of the civilization, or it goes up productivity of the network of people that adopt the asset, right? Gold is not digital energy. Gold is not metallic energy, not really. The problem with, or it's a much weaker form because gold is losing 2 to 3% of its energy value every year, and because you can't really develop gold on a big tech network. And control of gold as an asset rests with the gold bankers, right? It's like it's a much weaker thing. And so because it's weaker, there is no gold company, there's no gold miner that could pursue the strategy that we're pursuing. For example, if gold was really money, gold miners would never sell gold. They would mine less gold. They would hoard the gold, and they would borrow money to buy more gold. Right? But you see the opposite with gold miners. Gold miners overmine the gold. They dump gold on the market. They mine so much gold that they pay a huge 30% corporate income tax. Then they still have extra cash. So then they go buy back their debt. They don't borrow money at 2%. They could borrow money at 2%, Peter. Instead, they loan money to banks at 2%. So they're mining gold, tearing up the rainforest to mine the gold, to dump the gold, to drive the price of the gold down, to pay the tax so they can loan money and so they can buy dollars to get a 2% yield. And then when they finish with that, they've still got extra money left. So instead of buying gold with it, they dividend that out to you, the shareholder, and then you pay tax on it. So gold miners are revving the engine to get US dollars and get rid of the gold.